Awesome. And it is Fridays in Fintech. We are live now, and we have a wonderful guest, Rich Bachman, joining us. Rick, great to have you here.
Great to be here. Thanks, Jake.
Yeah. So I'll give you a little introduction about yourself and what Rick's doing. It's pretty incredible. Rick has over 2 decades of regulatory compliance experience. Rick has been instrumental in shaping the compliance strategies of over 200 fintech firms. I think, Rick, I just got it was about 220 total that
Yep.
you've advised. That's
220,
incredible.
250 now, maybe.
That's insane. So everyone from Chime, Mercury, Brex, Good Money, One, Gusto or Gusto, however you call them, and Orem, and many other great fintechs. And really, you started your consulting firm in 2017 when you had identified a crucial gap where in the fintech sector where technology often outpaced financial regulation, and you saw this opportunity, which is really neat, really cool. And prior to Scale Consulting, Rick served as vice president as head of compliance at Lending Home, where he was responsible for implementing comprehensive regulatory compliance frameworks. And before that, you were at Wells Fargo and Bank of the West, great companies, great banks where Rick managed compliance operations across various consumer lending and financial services sectors. And really, what you see, what you do, and what you share with me as well is your strategic advisors, understanding fintech operations from a compliance standpoint and from a product standpoint, where you collaborate with the client teams, the bank partners, and regulatory bodies to ensure that compliance frameworks support the business and its growth. But Rick, great to have you here. Oh,
There you are. And you're back. Or I'm back.
is it cutting in and out?
Yeah, there's a little bit of a gap in there, but
Oh man.
we'll work through it.
Yeah. I think maybe I need to double check the Wi-Fi at the WeWorks, but it's great to have you here. And we know, I think I asked this last time, but I just want to double down on it. We asked the hard question starting out. And did you prefer pineapple on your pizza or?
I've never been a fan of it, but my older daughter, every time, that's her go-to. So if there's pizza
Yeah.
laying around, it's usually pineapple and pepperoni. So I've gotten used to it now, and it's fine. But
You're just like it's whatever.
it's there, yeah. But
Yeah. Yeah. So curious with your journey, you started out at Wells Fargo, and then you went to Bank of the West, and then you went to Lending Home. I'm curious what drove those steps to kind of going from the traditional world to maybe Lending Home, and then the idea to start your own consulting firm.
yeah. Well, yeah, that was the 16, 17-year process. So, when you say it that way, it sounds like, well, it was a quick thing, like a decision was made today. And, I started out actually in sales. So I was in
Really?
Northwest Financial, and we were a small money lender, definitely subprime, like as low prime as possible. And we were selling, some small loans and consolidation loan, real estate consolidation loans.
Oh, interesting.
So did that, started right after college, and by 21, I was managing a branch. And then our compliance function there, it was interesting at Wells Fargo. You had to have had branch manager experience to become a part of the compliance department. So you basically knew how
Interesting.
things ran, you knew how it was supposed to work in the branches. And so then you moved into the compliance function. And I had 65 offices that I was responsible for reviewing between Minot, North Dakota, and Lawton, Oklahoma. So a lot of windshield time, ranging from the coldest I've ever been in Minot down to some of the most interesting parts in that red dirt of Oklahoma. So, so the shift from operations to compliance kind of happened there. And then I became
Interesting.
responsible for managing centralized functions. Like we were centralizing all of underwriting, we were centralizing all of collections at Wells Fargo at the time, and so I took a role where I was building those compliance programs for basically these independent business units.
Oh,
So that
interesting. Wow.
that definitely became a part of what I did later on in life. So went from Wells Fargo after 15 years to Bank of the West into their fair lending role. Did that for a few years, and then actually there was a recruiter that said, "Hey, there's this head of compliance job that is available. Would be something you'd be interested in."
Mm.
And so that's when I made the shift over into the fintech space with Lending Home and now Kiavi. Um,
Mm.
Yeah, so that was a completely different world. But a
Hmm.
lot of what I had done had been building programs for centralized functions and realizing in the fintech space, that's what you're doing. You're building a compliance program for this business unit. And so thinking through all the pieces that needed to go in that. Um, but this time actually owning it. So being
Wow.
responsible for building it, managing it, bringing the team in and all of those things. So it wasn't a huge shift, but it definitely kind of drew on all of the experience I had had leading up to that point.
Okay.
Um,
How big
then
was the team when you joined, and where did you
we had
how'd you
three or
see it
four
grow?
people usually. It was a small team.
Wow.
It was a small enough that we could do a lot of things. We had licensing and
Hmm.
testing and all of that in one function. And then I had the quality assurance team who was kind of reviewing everything happening in the underwriting world. So we had a test function over there as well. So it was another 6 or 7 people. So yeah, it was a relatively small group, but it was a close group that got a lot done.
Hmm.
Um, and then the consulting thing kind of happened while I was working at Lending Home, and it came to me. A couple of my first two clients, they needed help getting through due diligence, and
Mm.
so needed a program put together, and was able to successfully pull that off. And then in the end of 2017, when I left Lending Home and was kind of in the process of deciding if I wanted to go in-house as chief compliance officer or consultant, I kind of had the consulting bug already,
Hmm.
and met some early clients there with Chime and some others, and from then it just kind of the story wrote itself.
Yeah, that's pretty incredible. And so you really, even when you're at Lending Home, you had these other clients coming to you. Hey, we need to stand up a program. And is that your specialty, kind of standing up programs?
Yeah, yeah.
Yeah.
So there's really three parts to how well, and creating the program has always been kind of the foundation of it. But what's happened is
Hmm.
having worked with so many and worked with so many of the banks and the vendors and the VAS providers and everyone else, my role has kind of moved forward in the process of, hey, we're thinking about offering a product. How do we even do it? Who do we talk to?
Hmm.
Who would be a good bank for this? Who do we need to connect to this? How do we even build it? Can you help us model revenue? Like, are we going to make money doing this? And sometimes the answer has been no. There's no way you're going to make money doing this. Uh, but yeah, and then it's kind of putting the program together and helping them get that ready and understanding what the requirements are for the product that they're offering and how they need to structure the team and all of that.
Hmm.
And then now what I do a lot of is kind of fractional compliance role. So up to the point you need to have your full-time chief compliance officer and you start building your staff out, you need some compliance coverage, and so that's where scale is able to kind of fit into that piece for now.
Got it. Got it. Where are you kind of seeing it's shifting a lot, right? So you came in 2017. I'm curious, one, the differences between 2017 being a fractional CCO or coming on consulting versus now.
Yeah.
And where have you seen the shifts in priorities from a partner bank, from a fintech perspective as well?
Yeah, well, yeah, I did think that differences couldn't be more pronounced from then till now. Yeah, well, one of the things that my favorite thing about it is when probably 2017, or even going back further than that, when I first got into fintech, the word was disruption. Yeah, we're going
Mm.
to disrupt this world. We're going to disrupt banking. We're going to disrupt lending. We're going to disrupt all of these things. And the word now is partnership. And so, fintechs now understand, I think, that they're not really disrupting anything. They're partnering with somebody to be able to offer this. And nobody's thinking, oh, we can put Wells Fargo out of business. We can put Bank of America out of business by offering this product. There's If we can offer part of what they do to a group of their customers in a better, more efficient way, more pleasant way, we can probably get a little bit of their customer base.
Mm.
But we need to partner with another bank because rarely are we going to be the issuer ourselves. So if we want to have a deposit product, it's with a bank. If we want to have a credit card product, the bank is the issuer. So how do you partner with these banks and make it valuable for both parties? So I don't hear disrupt as often anymore. Every once in a while, it'll come up in a conversation. We're going to disrupt this. I'm like, you're probably not going to disrupt. It's probably going to be fine before and after you do this. But how do you serve the customers that you want to serve the right way, the best way, and in a profitable way for your company?
Yeah, it's kind of funny. I definitely echo that because the teens were all about banks are too big to fail, or and stuff along those like how do we need to change it up, we need to disrupt it, and now regulators are coming down, and there's a shift happening, especially in the BaaS space, and now fintechs like not how do we grab consumers in a new way, but how do we figure out these partnerships in a new way as well, where it's not just going direct to consumers, but maybe a B2B to C play. And I'm seeing that a lot.
Yeah.
Yeah, I'm curious. Have you seen any interesting business models lately that you're really
Well,
excited about?
well, let me get to that. But one
Yeah.
thing I want to add to that last comment is, in 2016, I think it was, I spoke at a Fair Lending conference, representing Lending Home at the time. And so I was on a panel, and it was two regulators, consultant, me as the head of compliance for a fintech company.
Hmm.
And so, first of all, it's funny because the regulators have to get every word of their presentation approved because they
Mhm.
can't give guidance out there to this audience and just they can't speak off the cuff. And so, the moral of it is that the two regulators were saying, the fintech is the wild west of compliance. There's no rules that apply to them, and they're just off doing their own thing. And so me
Hmm.
sitting on the stage with them, me wearing jeans, them in their suits, me with a cocktail napkin with 4 bullets on it, saying, "Here's what I want to talk about." And the point then was all of the same regulations apply. Um,
Hmm.
we have to provide the product in a way that is compliant with all of the laws that you regulators are talking about. We're just finding a little bit different ways to do it sometimes. And I think though that maybe went off the rails early on. So when we talk about the difference between 2017 and now, I think there wasn't the same level of focus, certainly wasn't the same level of focus on how compliance is met in the fintech space. Where now I think the banks are certainly being reminded of it. We see it every week, some consent order that
Hmm.
happened, or
Hmm.
some of the banks that are discontinuing certain programs because of the compliance risk. And so there's definitely a stronger focus on that. There's more selection happening by the banks for who they're going to take on. And part of their evaluation now includes the compliance piece. It's not just, oh, well, they've got some policies, I'm sure it's fine. It's we really need to know, is this going to work? And we're going to be looking at it. And 6 months down the line, we're going to ask you about more things and how's it going versus just blindly trusting that you implemented everything that we thought you were going to.
Right.
Um, well, yeah, I mean, other differences, the product sets, and what people are interested in putting out there. I mentioned to you separately of the change in how companies need to define what their market is and where their customers are coming from. Yeah, and so the interesting business models now are still those that are finding their markets that are interesting and different, and not just hey, we have another debit card program to offer, or we have a debit card program but we're going to plant trees, or we have a debit card program and we're going to look at some carbon neutrality, which are all great programs, but they weren't sustainable enough in a way that you can find a market that is going to give you enough customers to be profitable.
Right. I 100% agree. And people are still trying to figure that out, right? You have Built, and then you have these other company Built focusing on rent, and now I think I just saw three companies uh, launched for mortgages, such as M Card, and that one actually can be sustainable, right? Or at least it's a pretty good wedge. I'm curious to hear your thoughts on those types of models.
Yeah, I think if you're somehow trying to align with a product they already have, and
Hmm.
so for some of those, you're not really taking the risk of anything. You're not taking the credit risk of them not paying their mortgage, for example.
Mm.
It's let's give them credit for it. Let's if they're doing something, let's reward people. And so can we provide some extra value to you on top of what you're already doing? And we see this with all of them that can we reduce the number of subscriptions you have by being able to look into your accounts and see where you might have duplicates, which that's a great business model. Or
Mm.
can we see where, can we give you credit for some of the things that you're already paying for, subscriptions that you're paying for, or rent
Hmm.
or mortgage or whatever else? Can we give you more credit for that? I think those are interesting because it's outside of really the financial services product in some ways. We're not issuing a new card to you. We're just going to we're going to provide some value for what you're already doing.
Hmm.
So I think the reward space generally, there's still some room there. I think a lot still, I still see a lot for cross-border payments. That's an issue that I think has not been solved correctly or broadly. There's some groups that are doing really well at finding a market that needs it and serving that individual market, whether it's U.S. to Mexico or U.S. to wherever.
Hmm.
There are some groups that are doing exceptionally well at it, but I think there's still room globally for those types of things to happen. And then, of course, it's going to be interesting to see when banks are interested again in participating in anything crypto related. Um, Everybody wanted that after the carbon neutrality and after the trees and everything that happened early on in debit cards.
Yep.
It's like, well, let's connect a crypto program to it. And then crypto winter hits, and like, how can we run fast enough away from this? And I don't know. That's certainly not recovered yet. And I don't know if it will, with all that happened with FTX and others. I think there's just too much risk for traditional banking to take too much of those things on.
Yeah. Do you think they'll? Because there is an OCC letter saying, hey, it's okay to use USDC for cross border, or for like payments, right? Cross
Yeah.
border payments is totally fine. But banks just aren't comfortable with that. They don't want to touch it. They don't want to expose any risk to it. Do you
Yeah,
see a point? Oh, go ahead.
yeah, I think there is. Sometimes they're too conservative. I mean, there are good crypto programs out there for sure,
Hmm.
and ones that get registered, that get the licenses they need, that have all of the right compliance controls in place. But those are all kind of hampered by the FTXs of the world that kind of just took faith out of the entire market and the entire industry. And so it takes a bank that's willing to understand that and look
Hmm.
at the individual program and say, okay, yeah, this one has, like, for example, I was on a call today with a bank and a crypto program that, like, they have a whole compliance program built out. They've got a team. They've been doing this for 10 years.
Mm.
Yeah, that's a different level of risk of somebody who's like, hey, we want to throw crypto out there.
Yeah.
Yeah, but so understandable why they're more skeptical of them, but I think there's still a huge opportunity for the programs in that space to do it right.
Yeah. Yeah. So do you see kind of the shift happening within the next couple years, or is it going to be pretty gradual towards that, or do you think
I think it's
anything
going to be
with?
gradual. I
Yeah.
think the confidence needs to be rebuilt in the market,
Hmm.
and so that happens at all levels. But until the banks can get comfortable, and how do you ease into that? I think that's not going to be a quick turn. And I think there's still things that are out there that are still pending, like the Gemini Genesis thing,
Mm.
that
Yep. Yep.
that whole bankruptcy. And so yeah, I think there's just things that need to be resolved before the banks will jump back in completely.
Yeah. I still get phishing emails from that one that went under that was with FTX. I got acquired. I forgot what they're called. But they're like, come claim again. I was like, wait, is this a phishing email or is this actually me getting my assets?
Right. Yeah. Yeah. Genesis, the earn thing, still
Yeah,
in bankruptcy.
yeah,
Which,
yeah.
by the way, if anybody's listening, I would like my money back, please.
Please, can I have it back? Yeah, I know. I actually, what was there were so many that failed. The one before FTX, what were they called? I actually had dinner with the founders like briefly. It was just fascinating.
Was
And
at least a nice dinner. Like, it's all,
yeah, yeah, yeah. It was very nice. It was very nice. Very nice dinner, like 30, 40 people. It's when everyone had lots of money and
right.
everything was free, right?
Yeah.
Um,
That's another issue.
yeah.
It's not just the banks that are more selective now, and crypto aside, now this is broadly for all
Hmm.
fintech. That it's not just the banks; it's the VCs still. They're we see that report come out, and every quarter is lower than the quarter before, and
Yep.
it's always comparing to last year, the year before.
Hmm.
So again, they're much more selective, and so it's not just, hey, I want to do this, and somebody's going to throw $5 million at you to do it, and you're going to find 10 banks that will say, yeah, come do it.
Yep.
It's you're working hard, and you've got to show that you've got the right business acumen for it, that you've got the right compliance pieces in, you've got the right technology pieces built
Hmm.
before anybody will talk to you, and then maybe you get $1 million. So
Yeah.
that's you're not seeing these same checks come out, and so the whole ecosystem is challenged a little bit right now. But I think it also creates better programs.
Yep.
If you can
Yep.
sell it, and some things I know you're working on, like if you can get out there and explain what you're doing, and people are like, yeah, that makes a ton of sense. There still is money to be had. It's just not thrown out there for free, and you have to prove that it makes sense.
Yep, I 100% agree. And I'm curious to hear kind of what you're seeing in the partner bank space, right? You have these smaller banks coming in, the maybe even like on the low end, 80 million up to $1 billion, and you have the billion to 30 billion that are still doing that. What are you kind of seeing right now? Is there still a growing demand? Are people pulling back? What's that
So
tide like?
there's a kind of a push-pull happening at both ends of it. So you see the bigger
Mm,
banks that are more selective, they're not bringing on the number of programs. There were times a couple of years ago that I was working on maybe 8 new programs in a month. And, I was going to some of these bigger banks. I was like, yep, everybody's welcome. Let's do it.
hmm
And so there was a lot of appetite to take these on. And so now what you're seeing, partly because their regulators have told them you need to be more selective, and
hmm
partly because they've started to see losses related to risk, and you've seen, some of the BaaS providers having problems. And so all of that mixing in. At the same time, you've got the smaller banks that said, well, what is it too late? Maybe we can still get in.
hmm
And so, you see those, and they're not doing a ton of programs every month, but they might add one or two. Um,
mm
and they've got a certain set of challenges that are different from it because they don't have maybe the infrastructure or the people to be able to say, well, let's build out this fintech onboarding program and let's apply these teams. It's the bank's BSA officer who's reviewing the BSA policies. It's the bank's compliance officer who's reviewing all the rest of the policies. It's their internal testing team. And so I think there's a market there. They can't take on too much because they just don't have the resources to be able to do this. If you're doing it right, you've got a whole team that is managing this function based on the risk appetite that the bank has. And so you'll kind of let them go through it. But when you're pulling people from their regular job to do it, you just can't take on very many. And you
hmm
don't have the money necessarily to do it. And maybe your technology is behind. So there's a lot more to it. But I think there's an appetite, and we're still seeing that, you know, I have this program and I happen to work with somebody who is the president of the bank or know somebody who's the president of the bank, and they're going to kind of selectively take this one program for me, and because it's me, not because they're out there trying to find fintech programs they can sponsor.
Gotcha. It's become much more selective, and hey, we have this great personal relationship, or you've
Yeah,
been vetted, and this kind of lines up to what we've seen, and we can on this one-off team. Let's try this out.
right. Yeah, and I think there's a trust issue in the entire industry.
Yeah.
And we've seen some of that in the lawsuits that happen between the programs and the banks and the BaaS providers and all of that. Can we trust that all of you are going to do what you say that you will and
Mhm.
what we all agree to? And then the
Yeah.
regulators come in like nobody's doing it. So, um,
Wait, everyone's like pointing fingers at each
yeah,
other,
well,
and
yeah, exactly. I
yeah,
mean, it is. It's like that Spider-Man meme, like no, no.
yeah. I was thinking of that. It's like,
Where do $5 million go?
yeah,
Have it.
yeah. I'm sure you're following the news with Synapse and
Yeah.
kind of what's happening with them, and I'm curious. Do you have any thoughts on that, or I mean, you don't have to share if you don't want to.
Um, I think, Synapse aside, not speaking directly to them, but I think there was some lack of oversight that existed in this entire industry between the banks and the BaaS providers. I also think that the BaaS providers, a lot of them would, or some of them would overcommit to what they could do, and
Yep.
so there was this trust placed in the BaaS provider from both sides. The
hmm
BaaS provider might tell the fintech company like, "Hey, don't worry about compliance. We do all of that for you. That's part of our offering, and you're going to pay us for it. But don't even worry about it."
Right.
And they'd convince the bank of the same thing, like, "Hey, we handle all the compliance for you. You don't even need to worry about them." And so it's everybody like, "Don't worry about it," until they have to worry about it. And nobody was looking right, or the fintech, maybe they didn't have their own compliance program because they were told not to have one. They didn't need
hmm
one,
Yep.
but then they
Yep.
weren't even sure what the BaaS provider was supposed to be doing for them.
Mm.
So they couldn't really do any effective monitoring because they didn't have a compliance person on the team. They didn't have their own policies. They didn't have their own program. So they couldn't even look at them to say, yeah, we think you're doing this right or wrong.
Yep.
And then I think some of the banks also kind of blindly trusted the BaaS providers. And so now we're seeing all of that come back to fruition of like, nope, you need to have this oversight function and the regulators are looking. And if you're not doing it right, they're going to let you know.
Yeah. It was kind of this. I think about it really about incentives, right? the incentives of it. I mean, really, I think people are going away from the middleware model, where
Yeah.
it's like, hey, we make money off a marketplace. We need to encourage this marketplace and encourage venture scale growth. So it kind of gets a little like, yes, we need to do these compliance things, but we also want growth. And
Right.
so you kind
Well,
of,
yeah, that's been
yeah,
forever, right?
yeah,
We
yeah,
want to
yeah,
grow. How do we do it in a compliant way? And compliance has never been a revenue center for anybody ever.
yeah.
You don't make money from compliance. But I think there's tools now, and there's ways that you can go about it that you organize compliance as part of the business, where it's not just an expense center
Hmm.
anymore. And you see the savings happen later on when you're not paying fines, when you're not having to deal with the expense of a consent order.
Yep.
And so it's a good investment, even if it's not generating revenue.
Yeah. I was talking with one bank and they were mentioning for some reason the fintechs that we work with that really focus on compliance just do better, just do overall. Because I think what it does is it trickles down to their end consumers, right? Because really
Yeah,
when there's compliance issues, that actually leads to unsatisfied customers. So if you're really on top of what's happening and addressing those issues, it's going to overall impact your bottom line.
right.
Um, Maybe, supposedly.
Maybe. Yeah.
Yeah, yeah. That's super fascinating. Any other, I mean, words for fintechs that are really looking to get into this space and advice for them versus, you know, what's happening now in the ecosystem and what they should really be thinking about?
Yeah, I think there used to be a mantra just in the tech world generally, but also in fintech of,
Hmm.
move fast and break stuff. Don't do that. Don't at all do that. Yeah, move through things methodically, and you can do it right. And make sure that you're putting that investment at the front end to get it done right to start with.
Hmm.
If you don't, you're not going to even find a bank partner who will participate with you. And if you do, you're all gonna run into problems later. Make sure that you're thinking through it the right way. You're getting the right resources early
Hmm.
to build that out. And I guess the other thing, and I mentioned this to you separately, or I mentioned already, of know where your customers are coming from. More
Hmm.
than anything, like the compliance thing is important, but if you don't have any customers, it doesn't matter about compliance. It doesn't matter about your credit risk. It doesn't matter about anybody else or anything else because you don't have customers using your platform. So really know
Hmm.
where you're planning to get your customers from and why they're going to come to you. Versus, you've got a generic debit card that there's nothing special to it. It's not really for a market. You just want to get it in a wallet. Well, you probably can for 100 people or 500 people, but you're not going to
Yep.
grow and you're not going to sustain things that way.
Is right. Is that go to market? Is that CAC? Is that unique value add strong enough to create a tailwind, right? And to create this brand, like the back to the built example, that definitely was,
Right.
right? It's like that was a almost like a paradigm shift for this new product.
Yeah.
But Rick, we are coming at an end. I wish I could ask you more questions because I feel like I could get a lot more knowledge from you. But this has been great. And what we like to do at the end of every Fridays at Fintech, we like closed loop systems, no KYC, all the and so we give you a random gift card to a random Midwestern chain restaurant, and the uh, random restaurant today is Rick. Where are you located, by the way?
Well, I'm in
I
the
want to
Bay
make sure
Area,
it's
so
the Bay Area.
yeah.
Oh,
So mid.
it
That's
is.
one. Let's see what the wheels say. What do we get?
Okay, so this isn't really a chain, but it's like a California thing. So In and Out.
Definitely that
Uh,
works.
that'll work. So take the kids, have fun.
That's
But
right.
Rick, really great having you. Thanks again for joining us. Super awesome stuff. And anyone, feel free to contact Rick. Has advised over 200 fintechs. Blows my mind. Worked with all the greats. And yeah, Rick, really great
I
having you.
appreciate it, Jake. Thanks a lot, and happy Friday.
Yeah, happy Friday.